Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. I'm going through them all today after Friday's WASI report. So lots to talk and think about. Why don't we jump right in and get to these markets? How's that corn table looking this morning? Well, we tried to fight back a little bit. We're only down 2 cents in December at 5.15 and a half. That's about 8 cents off the lows. So that's not a bad recovery there. We're about 4 cents off the highs. December corn 5.15 3/4 last, which is down 1 3/4 penny. How about soybeans? What does that look like today? Let's take a look at the soybeans. There we go. November eking out a gain, up 2 ticks, a half cent, 12.87 even. While January is sharply unchanged at 12.94 3/4. How about Chicago wheat? What do we have happening in that wheat sector here this morning? Just off a little bit. December's off a penny, 6.87 and a half, while March is off 2 cents at 6.97 and a quarter. How about hard red wheat in Kansas City? Kansas City hard red. Here we go. We've got some pluses on the board here. December's up 4 1/4 at 6.86 3/4, while March is up 3 3/4 at 6.95 and a half. How about spring wheat in Minneapolis? Minneapolis, here we come. Spring wheat down 7 3/4 cents in December at 8.71. That's about 5 cents off the lows there. So we'll keep an eye on that for you. March is off 6 cents at 8.62. How about cotton? Let's take a look at that one real quick here before we get to our guests. Cotton has been down today. It probably still is around that. Yep, $1.05 lower at 94.18. Hasn't really moved since we last checked it, but we'll keep an eye on that as well. How about bringing in our guest, Todd Horowitz from Bubba Trading? Todd's a longtime friend of the show, longtime friend of mine, good old pit mentor. Well, Todd, again, a big data dump on Friday. I've just rattled off all the markets to you there. What are your thoughts here as we start the week?
Well, Scott, I think that they look like there's some room to go down. It's really hard to grab a gauge of the markets in these very challenging, slow conditions. And this week, we're going to have a lot of traders are going to be off midweek. So it's going to be another slow week to combine into some very sloppy trade. But I think the trends right now are lower across the board. I do look forward to much better action coming, and I look for higher prices, but I think there is still some work to do on the downside, and I think we could see, corn get to $5, and I think you could see beans get back down to close to 12, and wheat maybe 6.5. So I think there is some work to do on the downside before this rally shows up that I'm looking for.
Well, we got the numbers we got on Friday. They weren't big enough or bad enough to bring new sellers to the market. That's whether I think the market kind of recovered on its own, but also, we had PPI on Friday, which we didn't really talk a lot about. I know that you saw it, and it was a pretty hot number, right? And that's going to spur on the more inflation talks, and that's got everybody worried, and that had that dollar a little bit stronger here. And I think, really, when we came in this morning, most of the negative action was because, A, you said it already, it was kind of quiet and was going to be kind of quiet. And number two is that we had that dollar kind of a little bit stronger. What do you think about that?
Well, I mean, again, I look at the dollar, but, over time, the prices will work out and the supply and demand curve will take care of itself. I think with lack of other things to look for, some will look towards the dollar and look towards other things. But I do think that, again, the overall trends, if you look at a market, is just lower right now. And lack of any real buying coming in will continue to drift lower. I think we see in commodities typically the opposite of what we see in markets, which is markets tend to drift higher. And commodities trying to drift lower in lack of nothing to do. And I think you're seeing some try to push these lower. We saw it on Friday, and they can't get it. And we know when they start to look at each other and say, oops, I made a mistake. And I think that will be eventually what will drive this market. But in these very lackluster times of trading, I think it becomes much more of a challenge and easier to sit it out and observe and wait for the moves you're looking for.
Well, as they say, you got to feed the bull every day, and we're going to go away and feed our bull. We're going to go away and pay some bills. We'll be back with Todd Horowitz to talk livestock after this. Welcome back to Market Day Report. I'm Scott Shelby, otherwise known as the Cow Guy. Thanks for staying with us. Thanks for tuning in if you're just tuning in. And if you are just tuning in, we're going to jump in and take a look at that live cattle table. Let's get to the markets right away. That's what you want to see. How about live cattle? We're off $1.32 in that October, kind of taking it on the chin here. We're now $1.35 lower at 122.07. We've got December off $1.30 at 126.92. How about feeders? Let's take a look at that feeder cattle table. How about $2.55 lower in that October contract at 155.17. We're off our lows though, so I guess that'll be a little bit of a comfort there. We've got November down $2.22 at 156.90. And then finally, rounding out things, we've got lean hogs down $1.42 at 81.02 in that October contract, and $1.82 lower in Dees at 74.27. We still have Todd Horowitz from Bubba Trading. He's in Las Vegas. Todd, I mean, boy, and there's a lot to talk about, I suppose, but does anything jump out of you there when it comes to those meats, the livestock?
They look very ugly, which is really shocking based on what I suspect the demand's going to be. But again, the price is the price, and you continue to sell. And I think there's a big tip-off this morning when corn was lower and feeders were still low, down $1 at that time, and now obviously down $2. I think there's almost the same stories in grains. I think there's some work to do on the downside. But I do think that we're going to get some action here. But as you and I talked a little bit during the break, but the inflation that nobody refuses to admit that we have becomes a bigger problem. And it does lead into a potential stagflation period of the Jimmy Carter era. And this is not healthy for any market at the moment.
Right. So just to bring the viewers and listeners up to speed, we had a PPI, a producer price index release from the government last Friday. And it was hot. What I mean by hot, it showed more inflation than we thought we were going to get. And actually, it's the hottest it's been since 2010. So that's pretty significant. We've been arguing whether or not these inflationary pressures were going to be temporary or longer term. I started off in the temporary camp, but as each day goes by, you kind of have to start to think that hamburger that's now 25 cents more expensive is not going to go back down by 25 cents when everything kind of cleans up here. So these things are looking to be less transitory by the day and look more and more like they're going to stick with us for the longer term. Now, that's why I think the dollar was stronger here this morning, because we did see, the rate squeeze a little. Now, tomorrow, we've got a consumer price index to see if those prices go from the producer to the consumer. That'll be another big read on inflation, Todd, and I think that's going to be another thing that we're going to have to keep our eye on.
I think it's going to be really hot, Scott.
Right. You think it's going to be really hot? Well, I mean, if that's the case, these things are going to trade on their heels for the next few days, and that's probably what you're trying to tell me right there anyway. All right, well, Todd, I love it. I got to jump here. Thank you very much for coming on. That's Todd Horowitz from Bubba Trading. He's in Las Vegas. We're in Nashville. I'm going to hand it back over to Tammy.